Governments tried stimulus packages, austerity policies, bailouts, printing money, raising taxes, cutting taxes. Every solution made the system worse, because the core problem remains. To keep the economy alive, we need more money. To create more money, we need more debt. It's an endless loop, a treadmill, a cycle with no exit. That's why countries don't collapse when they're in debt. They collapse when the flow of debt slows down. Debt isn't a flaw, it's the foundation. And every attempt to fix the system only strengthens the real master, the debt machine. Look around. The patterns are repeating faster than ever. Countries bail out banks. Banks create loans. Loans create money. Money creates inflation. Inflation forces more borrowing. Borrowing increases debt. Debt grows faster than the economy, and the shocking data. 90% of all US dollars in existence were created after 2008, not earned, created out of thin air. Humanity didn't just transition into a debt system, it evolved into it, accepted it, normalized it. Today, money isn't the point. Debt is. Money is the illusion. Debt is the reality. Money no longer represents value. It represents obligation. Every dollar today is a promise to repay something that never existed physically. Debt is engineered to grow faster than economies, because interest demands more debt just to sustain the cycle. Nations aren't in debt by accident. It's the design. A system where governments depend on borrowing is a system that never loses control. The world isn't heading toward a financial collapse. It's heading toward a financial transformation, one where debt will decide who thrives, who fails, and who controls the global narrative. The real question isn't how much money do we have. It's who owns the debt, and therefore owns us. Because money may be dead, but the system built on its corpse is only getting stronger. If this opened your eyes to how debt controls our world, subscribe for deeper dives into money history, global debt, and the hidden mechanisms shaping our financial reality. And remember, the system counts on your silence. Let's break it together. Once central banks saw how powerful debt-based money was, entire nations followed. Fast forward to the early 1900s, countries were modernizing, empires needed financing, and wars demanded resources. Real money couldn't keep up, but debt could be issued in seconds. Then came the breaking point, the moment everything changed forever. 1971, the Nixon shock. The day the United States ended the gold standard for the first time. The world's reserve currency wasn't backed by anything. Not gold, not resources, not limits, just trust, debt. And after that day, debt creation went vertical. Governments borrowed more, banks loaned more. People depended on credit for homes, cars, education, everything, and money. It was no longer something you earned. It was something someone created every time you borrowed. Debt became the master. Money became the servant. At first, the debt-based system looked like a miracle. Nations developed faster. People bought homes younger. Businesses expanded like wildfire. But beneath the surface, something darker was happening. Every dollar created interest. And that interest had to come from somewhere. Governments needed taxes. Banks needed borrowers. Corporations needed consumers. Suddenly, economic growth wasn't a goal. It was a requirement. And if growth slowed, debt piled up, payments increased, cracks appeared. This didn't just change economies, it rewired society. We weren't saving anymore. We were financing, leasing, borrowing, rolling debt into more debt. Money became temporary. Debt became permanent. By the 2000s, nearly every major country was drowning in national debt. And here's the dark twist. Countries don't repay debt, they renew it. Forever. Debt isn't a burden to remove, it's the main product of the system. A product that creates interest for central banks, power for lenders, independence for governments today. The US national debt is in the tens of trillions. Global debt has exceeded $300 trillion, and world GDP, far less. In other words, we owe more than we produce. A debt isn't a number anymore, it's an ecosystem, a machine, a master. And every citizen, even those without loans, is trapped inside it. Money didn't collapse in a single night. It didn't burn in a financial crash or vanish in a bank failure. or disappear in a stock market panic. No, money died quietly. On the day it was replaced by something far more profitable and far more dangerous: debt. And the strangest part? Nobody noticed the funeral because the new system didn't take power with violence. It took power with permission. Gold, silver. Something you could measure. But behind the scenes, a new idea was growing. An idea so powerful it would bend nations, build empires, and enslave economies. The idea was simple. What if money didn't need to exist for wealth to be created? This question birthed central banks, credit systems, and the first versions of what we now call debt-based money. But to understand how the system took over, we need to go back to the origin of the trick. The trick that made money infinite and value disappear. And trust me, what starts as a harmless workaround becomes a global trap. The story begins in the 1600s. Merchants in Europe were sick of carrying heavy chests of gold across oceans. Ships sank, pirates attacked, and gold could be stolen in minutes. So they began using paper receipts, promises that gold was stored somewhere safe. These receipts weren't money. They were claims to money. But people started trading the receipts instead of the gold. Why? Because it was easier. And this convenience opened the first door. Because soon, the people holding the gold, early bankers, realized something shocking. Almost nobody came to take their gold back. They saw an opportunity. They printed more receipts than gold they actually held. And for the first time in history, money was created from absolutely nothing. Debt was born, and it was profitable. Dangerously profitable. This was the first death of money. Silent, hidden, unnoticed.